what I heard is somewhere around the lines of 25% of listings are down compared to this time last year. So that's
Okay.
always tough. But I believe that the people that wanted to do something this year or were planning to do something are still there, but with everything going on, they're just on pause. So I have a feeling there's going to be an influx of inventory at a certain point, and I do think that that gives an opportunity to the people that can sell now.
Mhm.
They've already moved, their house is vacant. I think that makes things a lot easier to show. So I'm not really that worried about the market, and we'll talk about that in just a little bit. But um, I mean, like, let's just start it this way. Like, how would you describe the real estate market for you today?
Well, we're seeing that, the market is obviously down.
Right.
I think that it's kind of like what you said. We're seeing it down about 20%. And that sounds about almost equal to what the number of listings are,
Yeah.
which is really interesting. And so typically speaking, right now, we would have an additional 20-25% of new contracts coming in. It's a
Right.
really interesting time for our industry because prior to the shutdown, we were busier than we've ever been ever.
And we started off very strong as well. So we were really, had a really optimistic outlook of the year, and then it's like, oh, pause button.
Yeah, throw that out the window. Let's start over.
Yeah, all my goals have to be pushed and changed now. So,
Right.
but the fortunate thing is you and I have been through something like this before,
Yes, we
and
have.
it wasn't fun, and
Yeah.
it's going to be hard. But I mean, I do believe we'll get through this. So basically, from your side of the market, well, I would think that you guys are still busy with refinances though right now.
Well, it's the same thing as last time, and so we had a group of questions, but we're kind of jumping around a little bit. But
Yeah.
um, the last time in 2008, we experienced a huge downturn in the market due to the mortgage crisis.
Right.
And it's very different this time because, unlike last time, it was the mortgage world's fault. You
Yeah.
know, the mortgage world and the real estate market, not in Tulsa, but around the world, pretty much brought the world's economies to its knees.
Right.
And this time, a virus did it. So it's totally different. And
Yeah.
but the nice thing is that last time and this time, we in Tulsa will weather this storm better than most other markets around the world and around the
Yeah.
US.
And that's what I feel as well. I think once things get back to whatever the new normal is going to be, um, I think that people will get back out there
Correct.
quicker than in other states, of course.
Exactly.
So I did jump around. You're right. So let's go back in kind of in order. So we feel like the real estate market is not bad, but it's just not where it typically is for this time of year. And we feel that once things get back to a little bit more normalcy, we'll probably be busier. But I think you asked me a question. I think we have about 9 contracts going on right now. I would say normally this time of year we'd have about 15. We like to try to close about 10 deals a month, and I mean we're at 9. But because this is the busy time of year, normally we're at a little bit higher
Correct.
amount today. So we're still working. I sold a house last couple weeks ago in 12 hours, and
Yeah.
so that still happens today if a house is good and priced right. But what I
Well,
really want to go
that
ahead,
also
go ahead.
plays into what you said a few minutes ago. There's less houses on the market.
Yes,
So
exactly.
what's happening is that there might be a less buyer pool, but because there are less houses in the market, if you want to sell your house, this is actually a good time to do it because those buyers that are determined to buy a house today, regardless of what's happening with the COVID, your house is going to get attention. And
Yep.
that's just like what you just said, your house sold in 12 hours. We have people that are still getting transferred into Tulsa that they've
Hmm.
had their transfer plan for, 6 months. It's still happening. They're still coming.
Right. Yep.
So, they still have to buy a house. They've sold their house a month ago. They still have to buy a house. Things are still moving forward in the Tulsa real estate market.
Okay. Yes, and I agree. And to get a little bit more on point, as I've been talking to clients, and they're trying to understand what's going on. If there are people that own a home that are curious to understand, like, they're not gonna buy or sell this year, but they're
Mhm.
curious what's going on and how everything's going to affect them. Um, we spoke yesterday about the stimulus bill, or is it also called the CARES Act, right?
Stimulus bill,
Wh-
CARES Act.
what is that?
So it's a comprehensive bill that was passed by Congress, and it was passed to help stimulate the economy and to help both consumers and businesses weather the COVID shutdown. And it has pieces of it that one of the pieces was a 13 additional weeks of unemployment
Hmm.
for consumers. It's about $600 a week, which is amazing. It has small business loans in it, but it also has a provision that allows for home owners to ask for forbearance on their mortgage payments for anywhere from 3 months, 6 months to 12 months.
Okay, so if a homeowner chooses to use one of those options, how will it affect them? And I don't know if we have all the answers yet, but what do you know right now?
Well, that's a really interesting thing because the bill itself does not outline how a mortgage bank has to perform in this matter. So it has some provisions. It says it will not hurt your credit. Okay, that's first and
Okay, so
foremost.
it won't hurt. Okay,
That it will not hurt your credit if you choose to do it, as long as, and this is very important, as long as you get the approval first. So
okay,
don't just miss your mortgage payment because then you'll have a late payment on your mortgage and they will not go backwards. I promise. You have to ask your servicer of your loan, can I participate with the stimulus bill's provision to ask for forbearance? And I will tell you, not every loan qualifies for forbearance. And
okay,
just an example of those, if if you're a homeowner and you have a loan that is serviced by a bank, but it's backed by a government agency like Fannie, Freddie, HUD, RD, or 184 loan, or VA, those loans qualify.
okay,
But if you have a loan that was just originated, but it has not been insured by Fannie yet, then it doesn't qualify. So if you bought a house last month, you need to make sure you talk to your mortgage originator and ask them, does my loan qualify for a forbearance at this point? Because it very likely doesn't, because you
okay,
need to make your first payment with your servicer, because until then, it's not actually, um, it doesn't actually qualify yet.
okay. Um, and so, do you know if somebody chooses to use it, it doesn't affect their credit? That's nice to know. Uh, but the bank's going to want to be paid back at some point. So, do you know how a owner's going to have to pay that back?
So, one of the things that's really interesting is that it did not outline how a bank had to allow the repayment plan. And that's actually kind of scary to me because if you're a homeowner and you choose to do this because you need to, it doesn't dictate to the mortgage company what they have to do for you. So what I've seen, and we will attach something to this video that kind of shows you an example. Wells
Thank
Fargo
you.
is a something to one of my clients, and we blocked out their information, and it says on there that they've been approved for a 3 month forbearance.
Okay.
When the forbearance is done, they will either spread it out over a number of payments, or they might put it at the end of their loan, but they don't actually say what they're planning on doing.
Okay.
So, so it's really up to, currently it's up to the mortgage company who's servicing the loan to make a decision if they're going to spread it out over 12 months or they're going to put it at the very end of the loan. But the very important thing for consumers to realize is they still owe that money,
Right.
and so
Okay. Yeah. Yeah.
it doesn't go away. So,
That's what I
yeah.
mean. The bank's going to want their money. They're not just going to let somebody skate. So if somebody is has the means and can still pay their mortgage, but they think maybe I want to try forbearance, just to save a little bit of cash, what would your recommendation be?
I wouldn't recommend it, and
Okay.
it's designed to help people that need it. And we, as a mortgage company, we've talked about this every day. if you're a consumer and you've been laid off from your job and you don't have any other choice but to make, to do the forbearance, do it. That's what
Right.
it's there. It's better than missing a mortgage payment because it will not hurt your credit. It's not a foreclosure. It will
Hmm.
give you a little bit of breathing room to figure out what you're going to do. But just remember that your taxes and insurance are still going to be due this year. Those companies are not going to agree to not take payment. So what
Oh,
will happen is that at a very, very bare minimum will be spread out over 6 to 12 months from your mortgage company. So your
okay.
payment is going to go up. Second is if you have, just rough numbers, if you have $100,000 house and $150,000 house and you skip 12 months of payments, you're tacking on $12,000 worth of interest on your loan.
Right.
And then let's say that you're planning on wanting to upgrade your house or sell your house in a couple of years. Well, you may be upside down now,
Hmm. Yeah.
and you may not be able to sell your house.
Okay.
So it's designed for the people that really need it. It's not designed for people just to take it and keep some extra money, you
Hmm.
know. So we want people to take it that have to take it. You don't want people to take it that have options to make their mortgage payment because we don't know what will happen down the road for them.
Okay. And so, but basically, don't use it if you don't need it, and don't just assume that it can happen before you talk to somebody.
Correct.
Okay.
Always call and get permission. The nice thing is back in 2008, when consumers had to take a forbearance of their loan, it hurt their credit.
Right.
And we saw a huge rash of people's credit destroyed for anywhere from 4 to 7 years. We saw people unable to buy houses. And so I have to tell you, the lawmakers who wrote this bill consulted with the mortgage industry. And it's kind of like they only listened to about 50% of what they were told,
Yeah.
which isn't surprising.
Yeah.
So, you know, but like anything that's done very quickly, which is what this was done, they made a
Yeah.
lot of mistakes.
Really.
There exactly. They made a bunch of mistakes in this bill. So, yes, they figured out that they wanted to write a provision in it that said it will not hurt your credit. Okay, that's great. But they didn't write a provision in there on how it was going to be paid back.
Yeah.
And then they also made another huge flaw that is affecting our industry. And
In what way?
so they have allowed for without proof, anyone can take a forbearance on their loan. So if you have a job and you just want to call up your servicer and say, I want a forbearance of my loan because I was
Right.
affected by the COVID virus, your servicer has to say yes. So they'll say
No
yes,
matter what, they just have
no
to
matter
say,
what. No matter what. If it's a government backed insured loan, they have to say yes. Okay. So then we don't know what will happen in 3, 6, 12 months to how they'll repay it, but they have to say yes. Well, servicers of mortgages, they are not lending their own money. And that's a complex, discussion
yeah,
in
sure.
itself. But banks don't actually give their own money to consumers. They're giving them money from Fannie and Freddie. So it may say you're making your payment to Wells Fargo or to Cityscape Home Mortgage, but the truth is the money that came to that bank, that mortgage bank, came from somewhere else because
Okay.
banks just don't have unlimited amounts of funds to fund the mortgage industry. So they
Hmm.
get the money from Fannie, Freddie, and these other third party agencies. Well, in the stimulus bill, there's no provision that takes care of how those ongoing payments from the servicer will be made to that third party. And that third
Okay, I got it.
Yeah, that third party didn't agree to skip payments for 3 6 They
Yeah.
want the
Well,
money.
they they need it.
Yeah, they need it. And so there's nothing written in that bill that provides for how that money will be paid to whatever third party agency that is, whether it's the VA or it's Fannie or Freddie, or it could be a mortgage fund out there that people invest in, and those investors are expecting to get their mortgage payments.
So
So
basically, in like 3 to 6 months, we're going to have another video about how that mess is going to get cleaned up.
Right. Well, we're all hoping that the
Yeah.
the Fed steps in and funds this problem, because we're hoping that this will get fixed, so that it doesn't continue to cause a credit crunch, is what we're seeing in the market.
So there's a credit crunch. It actually saying the credit crunch kind of leads us to the next thing. With the changes in the market, the volatility in the market, um, what are the new challenges in buying a home right now?
So just so everybody knows out of the gate, there's still lots of options for homeowners,
Okay.
or buyers,
Yeah.
out there to buy a house. There's still plenty of options, and so I don't want anybody to be alarmed that the market has tightened up so much like it did back in '08. We still have lots of options, but what you are seeing is you're seeing some one-off examples of large banks that are servicers that are looking at their portfolio and they're saying, how I'm going to handle this. How am I going to handle the 25% of our consumers that don't make their mortgage payments? So they're
Hmm.
freezing up offering loans. So, for example, one of the nation's largest banks raised credit scores to 700 and a requirement of 20% down last week.
So they're saying that if you want to loan with us,
Mhm.
you must have a minimum of 700 credit score or higher, and you have to have 20% down, or
Correct.
you're going to have to go somewhere else.
You're gonna have to go somewhere else. And
Okay.
that particular bank, the reason they did it is they're a huge servicer of mortgages, and they don't know how they're going to make those third-party payments I talked about a few minutes ago. And so
Okay.
there's,
Yep. So
and
they
they're all
want people that they trust to pay them back, so they can
correct,
pay the third party.
correct.
Okay.
And they're also afraid that they don't want to originate a loan today, and then a week from today, somebody takes a forbearance.
Right.
That's
Right.
that's they're all trying to. Every bank is trying to prevent that right now. Every bank is trying to say. And so what they're going to do is they're going to look more closely at a lower credit score borrower with a much more intense look at. Every bank is going to do this because no one wants to originate a mortgage today. We do not want to close a mortgage for a home buyer tomorrow and then on Monday they call and forbear their loan. We just
Right.
it does not we can't function if that's what's happened.
So you're constantly checking employment.
Correct. And that's actually one of the things that has changed is that we now check employment at the start, the middle, and all the way up to right before closing. We're asking about employment.
Hmm.
We're making a home buyer certify that they do not know of any potential changes to their employment status, to their income of their employment, and that they don't think they're going to lose their job next week. And I know nobody can tell what the future will bring.
Sure. Sure.
You know, if somebody has a job and they're fully being paid and everything seems secure at the time of closing, we're good to go. We're not trying to get a crystal ball out and predict their future. But if they know they're going to be laid off on Monday, then we need to know, and we're going to put a pause on their loan. We're not
Right.
going to turn it down, though. This is a unique period of time. We've never seen this happen
Hmm.
in a. We feel very strongly that as soon as the market opens back up, I believe half of the people that were laid off will instantly get jobs back.
I think that too. Yep.
And over the next 2 to 3 months, I think a good chunk of 80% of the rest of the people will get their jobs back too.
Hmm.
So if I have a loan today and a person's laid off, furloughed, not laid off,
Right.
furloughed temporarily, all we're doing is we're setting the loan aside. We're just saying we're gonna push the pause button on your loan. As
Hmm.
soon as you're employed again, you're back working and your company's open, we'll start the process back up and we'll get you closed very quickly. You
Okay.
know,
So I'm Howard. I want to buy a house. I have 650 credit score. I need closing cost assistance,
Mhm.
and I want to put the minimum down for whatever loan product is the best for me. What would you
Right.
say to me today?
Well, you can still get a loan.
Okay.
You're a perfect FHA buyer. I'm still doing loans to 650 at Cityscape Home Mortgage. We're still offering that consumer an option. But what I am going to do is that what's more important in this market is if you say, but I wait tables.
Yeah.
and my income comes from tips,
Hmm.
and I'm currently not working, I will say, well, we'll get you pre-approved, but don't write an offer until you're back working. And in your case, I'm probably going to want you to be back on the job 30 days before we close, just because
Okay.
I want to see that you're getting tips and people are actually still going to restaurants and people are actually get out. The fear is lifted in our market.
Hmm.
And I have somebody like this right now. I have a consumer that is actually receiving his base salary, but about 60-70% of his income comes from commissions.
Right.
And, he runs a business that is currently shut down. So we know that his commission is not coming in, and he did not qualify just on his base pay.
So he
So
needed his commissions to buy a house.
it is commissioned to buy a house. In a normal market, though, if you were off work for 2 months, 3 months because of that, we would look at that as, well, that's maybe we should even do that and make him back on his job for longer. Well, in this case, all of our banks have made accommodations to say, we know this is unique.
Hmm.
We're going
Oh,
to
good.
just,
Okay.
yeah, we're going to take this out of the picture as soon as he's back on his job and we feel confident that everything in the economy is back running, we're good to go.
So, um, okay. Well, what if I talked to you 1st of March, got qualified with maybe all the minimums, a little lesser credit,
Yep.
and then moving forward to today with some of the changes you were talking about, like 700 credit score, 20%, would I still get the rate and all the stuff that we agreed to in March, or would
No,
it
things
change
have changed.
today? Okay.
The thing I would say is that, we're underwriting to what Fannie, Freddie, HUD, what they're putting out as new standards.
Hmm.
And what they've done is that Fannie has actually issued a new update to their automated underwriting system. FHA did the same thing. And
Hmm.
what that does is it's going to tighten up the credit requirement for them as well. So on black and white, FHA will go down to 560. But the
Right.
truth is, are you going to get an approval at 560 or 600 right now? Probably not.
Okay.
The truth is that automated underwriting system is going to want a little stronger borrower in this riskier time. And do I think this is going to last forever? No. I think it's going to be a much faster, swing back than it was in
Yeah.
the last 2008. But right now, what I'm doing is that we're going back through our borrowers and we're trying to make them as strong as possible. If somebody has a 675 credit score and I can get them to a 680, I want to do that because it's going to help them get a better interest rate.
So
Can
you
I
want
still
them so you want them to hit pause for just a minute, work on their credit for a few weeks or a month, be a stronger buyer, and then once everything gets a little bit more normal,
only if
it's it.
it's doable. On that borrower I was talking about, I could do that probably in a week or two. You
Oh,
know,
okay. I didn't know it was that quick.
if it's something that's really close and it's going to help them get a better rate and a better option, then I'm going to help them do it quickly. They can still get a house at 670. There's no problem with
Okay.
that. But what we're doing is that if it's somebody that we talked last night with our underwriters about a file, and they were a person who received commission in a marketing industry.
Hmm.
Same thing. And so our question was, are they still selling things or are they still working? Is the industry still functioning for them? And so
Okay.
all we ask the borrower to do is to provide us the most recent 30 days worth of their commission checks to show that they're still operating in the market. If they come back to us and say, well, things paused, then we're going to say, that's okay. We understand. This is unique. So we're gonna pause too.
Hmm.
Let's put your loan on hold. Let's not cancel it. Let's get the market back open and let's see that you're back working. And so for that person who wrote an offer, it may be that they have to ask for an extension.
Okay.
They may need a 30-day extension. They may need to close May 30th so that I can see that they're back working.
So we might need to do some like 60-day closings.
Yeah.
Okay. Well, and one thing that I'm hearing as we're talking, and I actually didn't think about this until you were explaining some of the stuff. Um, it sounds like if you're interested in selling your home in 2020, especially right now, even though it's weird, the most qualified buyers are really going to be the people buying your homes today.
Correct. Correct.
So with
Right
limited
now,
inventory,
that's fine.
yeah, so
Yeah.
so with limited inventory, meaning sellers don't have a lot of competition, and buyers that are being as qualified as possible, if you need to sell or you're really wanting to sell, it may be better to do something sooner than later
Would
before because I do think there's going to be an influx at some time. I just don't know when. And
correct.
I always think scarcity is good on the market.
It is absolutely. Well, if you think about it, is unfortunately the people that have been most affected by this horrible virus is those that are at higher risk of being affected by it because they're the service industry. It's
Hmm.
the um, people at restaurants, the people who work in casinos, the people who work at hotels. It's cleaning people, and so that 15 million people who lost their job are predominantly service industry people.
Right,
And, the truth is that that's not typically a huge portion of our home buying market in general. And they
right.
also are much more likely to get a job quickly because that market is constantly looking for jobs. And so the
Sure.
hope,
Yeah.
if we sustain them with that stimulus bill, which I believe it was actually a good stimulus bill for that market. If you can get $300 of Oklahoma unemployment and $600 from the federal government for 13 weeks, and we can get past this, that should help families. Now, it's not
Sure.
perfect, it can help families. Um, and they can continue to make their rent and their payments with that. To get over this hump, that market will pick back up. But the people out there that the other companies that are still functioning and can work from home and have good credit and can show that their industry is still functioning, then that's the buyers that are still out there buying houses. And so you're absolutely right. I mean, I think that if I had a house to put on the market and I wanted to get it sold quickly, I would probably consider getting it out there.
Right.
Now I understand if you have kids and you're worried about people coming in your house and
Oh, sure. Absolutely.
the other stuff, I totally get that. But if you could make accommodations, which I know that your team is, I would be
Yeah.
likely to list my house.
Yeah. Well, we're trying to do everything we can. We're all still learning, and we're all trying to be as safe as possible. And I mean, I'm sure we're all making some mistakes, but I also think we're all doing as good a job as we can. All things considered. Um,
Right.
but so I know we kind of said this at the beginning instead of at the end, but I'll kind of ask you this question. You know, how do you think 2020 will shake out after everything is lifted? I still have a pretty positive outlook on the market
So
overall.
I will tell you, I believe very strongly that this is another one of the many times I say, thank God we live in Tulsa. I know that sounds
Right.
funny.
Yeah.
I grew up just like lots of kids thinking, I want to move away and live in
Yeah.
some big
I'm getting out of here.
yeah, but as I've grown up and I'm in business in Tulsa, I'm more grateful for Tulsa than ever before. Just like in 2008, I believe very strongly that our market will bounce back very quickly from this.
Yeah.
We have a resilience of a market that we've never been overinflated.
Right.
And so back in '08, the problem was overinflated markets and a credit crunch that killed those markets further. And it became a spiraling effect
Hmm.
because some markets, Las Vegas was inflated by 75%. There was swaths of areas of Florida that were 100% inflated. And
Hmm.
so our market was never inflated. The same goes for today.
Yeah.
Back in '08, we saw a softening of our market to the tune of maybe 5% the first year. And
Right.
that was predominantly because that back then people couldn't get a loan.
Yeah.
You
Yeah.
know,
I know.
yeah, people, it was hard pressed to get a loan for that first year unless you were absolutely perfectly qualified.
It was really hard to get those deals closed back then.
Correct.
We had like 90-day closings back then, and there was
Correct.
a fight every day to get it done.
Correct. We have not seen that. Our banks and investors in the market are putting out temporary. Sorry, people are beeping in on
Yeah.
my computer.
Everybody's getting to work now. I know.
Yeah, exactly. Um, today people are putting out temporary guidelines for this blip in the market.
Hmm.
The reason that the market is slowing a bit is not because of the mortgage industry, not because there's a fundamental flaw in the market of America. It's because of a virus.
Right. Yeah.
So we in Oklahoma and in Tulsa, in my opinion, will bounce back much faster than markets like New York and San
Yeah,
Francisco.
I know. God, that's
You know,
so awful there. I mean,
yeah,
I know that we have some problems here, and there are plenty of families affected in Oklahoma, but it's nothing near what's going on in those areas. So
right,
again, it's I think it's because we live in the middle of the country, and
right.
it just didn't get here as easily, and not everybody's coming to Tulsa to visit all the time, see all the
Well,
sights.
it's just like you just said, though. When you live in a densely populated place, you end up with, it spreads faster.
Sure,
We're much
absolutely.
populated. We have a lot less mass crowds going through
Hmm.
subways, going through the city. Again, I saw an article the other day. It's making people rethink their country life. It's like in a smaller
I
place.
I will tell you, I sold a friend of mine. He wanted to buy some land to build a house. I've talked to three of my other friends that have always lived in Tulsa, and it's been a surprise to me that they're like, we want some land out in the country. And it wasn't just because of the virus; they were just kind of tired of city living and wanted just some space. But then this also kind of helped fuel saying like, you know what, maybe really it is time to think about that. So you're right. Rural living is kind of popular right now.
It's been very popular for a while now, and I just see that just increasing. And then
Mhm.
the nice thing about Tulsa is Tulsa has a very small footprint, and so the market continues to thrive in the city of Tulsa no matter what's happening. And so
Mhm.
even in the '80s. When they had the downturn in the oil industry, the middle of Tulsa still thrived, and now we see there's only so much land in Tulsa, and now people want that as well as they want rural. So I see
Mhm.
some very big positives in our market. There's been a shortage of houses before this happened,
Absolutely. Yep. Mhm.
so I feel positive about it too. Do I think the next 60, 90 days are going to be different? Yes. I
Yeah.
don't want to be Pollyanna. I think there's going to be challenges to the credit market. I think it's going to be challenges to consumers that are heavily affected by this virus. People who've lost their jobs, people who have lost lives because of it.
Right.
But I you know but I do see that when things do start opening back up, I pray and hope that I'm correct in this regard, that things do bounce back quickly for
That's what I'm
us.
hoping too.
Yeah.
Well, Howard, listen, I really appreciate your time. It's good to see you. And
Yeah,
I
it's
know
nice.
we talked a couple times, but this is my second Zoom meeting, so I didn't think it would be so nice, but it actually is nice to
Yeah, it is very
look at people when you're talking. And but anyway, I appreciate this. Please send me the example you have for the forbearance option, so people can get an idea of what that might look like if they need to use it.
yeah. If
Because
you
I
have
think we
questions, I'm always happy to help, regardless if I am the actual servicer of their loan, even if I'm just an expert that can help them answer a question. I'm always thrilled. So, please
right.
reach out and ask any questions.
Well, and that's why I wanted to talk to you because you know more about this subject than I do, and I think that I'm going to have more clients ask me if this is the right option for them, and I need to get them to an expert that can tell them yes or no. So I appreciate that.
Absolutely.
All right. Well, you have a good day.
Thank
Have a good
you.
weekend, and
Stay
stay
safe.
safe. Yep. You too.
Absolutely. Talk to you soon.
All right. Bye bye.
Bye.